thus 31st December 2013 being the year end owns the following equipment on 1 January 2013. So the cost of the equipment was 100,000. The accumulated depreciation of the equipment was 20,000, right? So the vehicle is sold on 1 July 2013 for 60,000 and it has a useful life of 10 years, right? Okay. So what you need to do, right, is we have to get the carrying amount on this date, right? So the carrying amount on this date would be the cost minus accumulated depreciation, right, minus the current depreciation, as this equipment was sold 6 months later, right? So it was sold 6 months later. So therefore, if we were to take 100,000 divide by 10, sorry about that, let me fix it, divide by 10 multiplied by 6 over 12. So therefore 100,000 divided by 10, which is 10,000, multiplied by half, which is 5,000. So therefore we reduce the cost with 5,000 and therefore it gives us an amount of 75,000. Therefore this would be our carrying amount, right? So therefore we have already calculated depreciation for the year, right? So now we can calculate our profit or loss that we've made on this vehicle. So the carrying amount, right, minus the proceeds that we've received, 60,000, would give us 15,000. And from looking at it, if we receive less money than what we have valued our asset for, so we are making a loss, right? So we are making a loss of 15,000. So we'd recognize this loss in the P&L statement, right? So it is basic. So immediately when you sell something that you value it for more, you are making a loss. But if you sell something which is greater than your value, you are making a profit. And in order to calculate whether it's a loss or whether it is a profit, you take the carrying amount less the proceeds. So if the carrying amount is greater than the proceeds, then it is a loss. If the carrying amount is less than the proceeds, then it is a profit. Okay, so now I would advise that we do some journals. As you know, in accounting, you always have to know how to present whatever you're saying so that it can be useful to the users of the financial statements, right? Okay, so depreciation would be debited by 5,000, which is the current day depreciation, right? And then obviously we're gonna credit accumulated depreciation, which is the credit amount. Then you know what we have to do. We have to remove the asset from our books, right? So therefore, in order for us to remove the asset from our books, we have to take all the depreciation that we have recognized in our books and debit it. So therefore, it will be the current depreciation plus the 20,000 that we've been given there at the top, which is 25,000. Therefore, we're gonna debit 25,000, right? And then since we have sold the asset, so the asset is no longer in our books, right? So therefore, we're gonna credit 100,000. Therefore, the bank, what does the bank do? The bank receives money. The bank receives an amount of 60,000, right? then the loss that has to be recognized in the P&L, right, would be debited as 15,000. Why? Because of an expense increases on the debit side. Therefore, the loss has to be recognized on the debit side. So if it was a profit, we're going to recognize it on the credit side. So I hope this makes sense. So whatever you have to do is recognize the depreciation for the current year, which is your step number one. Then your step number two is to remove the asset, because if we no longer have it in our books, why should our financial statement contain something we don't have in our books? So it would be ideal to remove it, right? Sorry for that. And this brings us to the end of the lesson.